Good evening, all, and welcome back. Um, Thanks for checking out the channel, and thanks for the new sub, Viper11. I notice every new subscriber that hits the channel here. I don't have like a ton of them, so when they get them added, I do notice. Thanks for the sub. As a matter of fact, if he's got 38,000 subscribers on his own YouTube channel. So if you're into like these real life war simulator type video games, go out and check out his channel. It's very quality. His name's Viper11. All right. So a couple of things happened last week. One of the things that happened last week was that I drank an entire bottle of champagne by myself because no one would drink it with me. And believe it or not, I don't really drink that much. So yeah, it was the day after was quite an adventure for me, if you can imagine. But I do faintly remember that I went on an Amazon shopping spree at the end of that bottle. So if you stick around to the end of this video when I record kind of like my fun stuff, we'll check out what I bought together because honestly, I don't really remember. So anyways, that'll be at the end. Okay, so now on to some more serious, stock markety investy stuff, right? All right, so we just hit all-time highs in the S&P, Dow, and the Nasdaq 100, and we got there yesterday. So we got to levels that we haven't seen since January of 2022. And honestly, the market to me, it does feel just a little bit toppy. I mean, we had that major run through November, again through December, and now going into January. And then yesterday was options expiration date for monthly options, which is the most common way that big money does options is on a monthly basis. And yesterday was the options expiration date for January. And it does feel to me like this market is kind of being squeezed higher and it's being driven by basically by Nvidia, and that was in my portfolio. And so if it's squeezing me and I'm just this little fish, I just can just imagine that, like these big money is really feeling the pinch. And so I feel like these options are kind of squeezing this market, just a bit higher. As a matter of fact, check this out. So I thought there might be a little shenanigans going on with Nvidia. Like I said, I'm just a small fish. I got squeezed, but I figure if some big bank had gotten squeezed, that they too were going to try and figure out a way to like recoup some of the money that they might have lost. So what I did was like right here near the end of trading, I put in for an extended hours trade with a strike price of $510, and it was for 200 shares. And so I was waiting for it to crash down. And you can see right here, it crashed down to $466. My strike was $510. I thought, happy days, right? I'm probably going to be assigned right here. Well, then today I wake up and find out I didn't get assigned these shares. So if you've ever seen these market blips like this and you think, you're kicking yourself, you're like, I wish I'd put in for an extended hours trade at this time on this day for something like this to happen because I'd have those shares. The answer is no. You won't have those shares. They're not apparently for us. They're for somebody else. But I put in for this trade mostly because I understand that Nvidia can go up. It was undervalued, and analysts hadn't quite clued into how a stock that grows hundreds of percent a year is barely trading at a market multiple. So they finally caught on to that. But, Lord Jensen got out there. He spoke in Vegas. He didn't tell us anything we didn't already know. Just any gamer knows about these new Nvidia GPUs, the new RTX. It's in the Nintendo Switch 2 console already. Any like a person that has Nvidia shares is well aware about their automotive, like their AI going into the automobile industry, and that's going to be a revenue driver for the company in the future. We may not have known the partnership with Mercedes-Benz specifically, but we knew that they had automotive technology, and that was going to be a growth driver for the company. So there was really no real fundamental reason for Nvidia to charge up $115 in like 10 trading days or whatever it was based on that news. This is all stuff we knew. It just went up because of analyst re-ratings and just upgrading the stock. Essentially, analysts just finally clued in that Nvidia was just too cheap. And so it squeezed higher. And because of all this options activity and this squeeze higher, I'm very confident actually that if I'm patient and I wait maybe till after earnings or maybe even just the next couple of weeks, but hopefully, hopefully just through the middle of next week, that I'll be able to get a really nice reentry price on Nvidia because I lost all my shares with a covered call, with covered calls this past week. But let me show you how I plan on getting into these shares again. Now let's first have a look at Nvidia here. It's trading at $594.75. It's got a forward price to earnings ratio, at least according to Charles Schwab, of 47.31. So we can see it's getting a little bit on the expensive side. And for companies like the Mag 7 type stocks, this is important because people really do look at the valuations of these sort of stocks. Not important for some, but important for these. But that's according to Schwab. I've seen other graphics show that it's got a forward price to earnings ratio of about 34. So it's not incredibly expensive, but according to these guys, it's pretty expensive. But what I want you to clue in on is right here that the earnings date is on February 21st, 2024, and this plays a role in how I intend to get these shares back. Now, the way that I'm going to re-enter my Nvidia position is through selling puts. And I apologize ahead of time if you already know this, but just for people that haven't seen this before, I just want to quickly just kind of go through just a really quick, small little tutorial. So what this selling a put says is that if by January 26th, if Nvidia is below $590, let's say it's $580, I agree to buy Nvidia for $590 a share. For this, someone has paid me $855 in premium, or $8.55 a share for 100 shares, because each contract is worth 100 shares. Now, like I said, I'm not willing to pay this price for Nvidia. I'm just not going to do it. And so what I'm going to do is I'm going to wait for a better reentry price. I think if I wait till the middle of next week, maybe a couple of weeks, maybe just before earnings, don't really know, maybe after earnings, that would be the time to get into this. But I'm going to wait for a better reentry price. Now, a price that I think is fair would be something like, say, $530. I think $530 is a fair price for Nvidia. If I can get that, I might get 200 shares. But if I have to get back into it, say, for $540, maybe 100. Like there was a time a couple of weeks ago that I would have made an entire portfolio out of Nvidia because it was just that undervalued. It didn't make sense for me to go out and buy anything else in the stock market. Nvidia was the obvious choice, and then finally analysts clued in, and now it's up to a price where it's not such an obvious choice. So there are other stocks that are this good, but I think that it's going to pull back and we can get a better reentry price. Now remember, they report their earnings on the 21st of February. So if I look here and I go to, say, the 16th of February, for this strike price, you can see that you get $19.95 per share, or $1,995 for a contract. And what this contract does, it says that, again, if it's below 590, I agree to buy these shares for 590. But the break-even point here is almost $20 below this. So I'm really buying it for $570.50 per share, right? Or no, $570.05 per share. And that's what my break-even price is for this particular trade. And that's $590 minus $19.95 a share. Now look what happens when I go on the other side of earnings with the same exact trade. Now all of a sudden, instead of $19.95, it's $2,810 for this contract. My new break-even price for this one is $561.90. And the reason why it went up 50% over the week before, some of it was timed expiration, and that adds a little bit more volatility because you're paying for volatility and time. But a lot of this was just all of the volatility that comes with selling an options contract right at the time of earnings. And that's where this is coming from. So if this was to pull back sometime before earnings, we'll say, and I can get a good entry price, say like $530, which is what I think is a pretty fair price for Nvidia, then I might buy one, maybe two contracts at that time. And I would sell puts for a strike date after they report earnings and try and maximize the amount of premium I get. And also at the same time, that will dramatically decrease my actual purchase price of these Nvidia shares. And that's what I'm getting hit for. I'd like it to get right around the $530 mark. maybe get a couple $1,000s for a contract and get that would have, in all effect, get me into Nvidia for about $510, per share. And I think that that's a pretty fair price for Nvidia. Now, obviously, that's a lot of money for me to just let sit around collecting dust in my bank account while I wait for Nvidia's earnings day, because that's over a month away. So in the meantime, I'm going to want to make a little bit of interest on that money. So what I'm going to do is I'm going to buy some fixed income, and this is going to serve two purposes. One, I'm going to get a little bit of money on my money while I sit here and wait for that earnings day. But the second thing it does is it makes me be patient, because I do think that the market feels a little bit toppy right now. I do believe that we're due for some sort of pullback before March, if not, if, at the very least, some consolidation and kind of trade sideways. I mean, it could always just keep on going straight up, but it just to me seems somewhat unlikely. I feel like we've been squeezed up to this level at this point, mostly due to Nvidia. And so I think we're due for some sort of small little pullback. So this gives me some ammunition to go in and get some better deals, say next month, and my hope is that I can actually re-enter my Nvidia trade at a reasonable price. So where I'd be parking this money would either be in bonds or in treasuries. And so let's go ahead and look at some of these corporate bonds here. Let me put my readers on, because some of these numbers are really little on my screen. My computer's tiny. And so we would go buy some corporates. You can see here on the drop down, I mean, I get corporates, municipals, treasuries, and so on and so forth, mortgage-backed securities. But in this case, we're going to look at corporates. And we do a February of 2024 strike date. And what we're looking for is something right around, the February 22nd time frame. These corporate bonds don't pay as good of interest rates as just regular old treasuries. So look, you can see right here that Realty Corp pays a 3.45% yield, Apple 3.55. The Bank of Nova Scotia is a little better. It's got 4.3. And Phillips 66, 4.35. So this would be their bond rate, but I think that you get about 4.35 out of Phillips 66's dividend yield. So I don't know why you would ever buy this one. But what I'm going to go into is treasuries. And this is going to be, again, February of 2024. Something I didn't know when I first started buying treasuries. So when you buy 1,000 and that's a minimum, each one of these treasuries is 1,000 shares. So if you're buying this, you're actually buying not 1,000, but 1 million shares. And I accidentally bought 1 million once, and it was kind of like, oh, how do I get out of this? But you can just sell it back to the market. I took a small loss of like 20 bucks or 30 bucks or something, but just know this is 1 million. This is 175,000. So I got to look for one. I only want 100,000. So something that has a number smaller than 100 or smaller. And so I can say I want to buy, say, something that expires on the 22nd here. Let's say this one here, and I get 5.5%, and I can buy 100. So I would want to collect 5.5% on my money. It's view only because I can't buy this at this time, but this would be exactly what I would buy. I would buy 100,000 shares of this and get 5.5%. It will mature on the 22nd, and my money will be ready for me on the 23rd at the time of the options expiration date for Nvidia. And that would be the plan that I'm going to be going with for executing this trade. In the meantime, I'm just kind of saving money and collecting a little bit of a dividend. All right, so I did buy a couple of stocks this week, and I've been on absolute fire. And I'm not saying go out and do something because I did it, but I did buy a couple of stocks this week. And I'll let you know what they are a little bit later in this video and why I bought these stocks. But I will say that since last July, I've just been on a tear. This market is my stocks have just been ripping higher. I even have an ETF that got squeezed away from me. Now I rebought this ETF because I really like it. But geez, it's like everything I seem to be buying is just screaming higher this last, few weeks or so. I mean, I'm at the point right now where I have to remind myself that the stock market is about small gains. That's all we're trying to do. That little 5.5% on those treasuries is kind of about that. Get yourself about 7 to 10% a year, and it's about that. But everything I'm just having is just ripping higher, so I kind of have to remind myself that this is not a casino. But nevertheless, I've got good reasons for buying the stocks that I bought, and I'll show you what I ended up buying. Now, I know my stock portfolio, it does look casino-like, and it does look like I am preparing for a pullback. However, I do believe that this market is going to continue charging higher, which might be hard to believe, for a lot of people, especially a lot of bears out there, given that earnings are coming in somewhat weak relative to expectations. The market was expecting 11% earnings growth in Q4 as recently as, say, like last October, and now it's expecting only 4% growth in Q4, with all 4 quarters of earnings growth in 2024 having downward revisions from where it was just like a few weeks ago. We also have these giant macro concerns with 2 wars in the Middle East, another one in Ukraine, a contentious election that's on the horizon, a Chinese economy that's in recession. So there are some real concerns out there, but despite all of those concerns, we do seem to have a strong economy, and it's made up of the strongest companies in the world, really the strongest companies this world has ever seen. They're all like, they have such far reach, and these CEOs are like, they're like diplomats, or like they're like pseudo world leaders is kind of what they are. They're what politicians wish they were. If there's a problem in China, who's the first person over there? It's Tim Cook, it's Elon Musk, it's Jensen Huang. They're all trying to negotiate this world order. It's not actually the politicians doing this, it's these people. It's why these like politicians can't stand them. It's because they pretty much kicked in the front door and taken over this world. And so these companies are very, very, very powerful. And it's on the back of these really strong companies that I believe this market will eventually consolidate or dip, but is eventually going to drive it higher. And that's because these companies have increasing margins, they have increasing earnings. We have accommodative central banks helping us all over the planet, whether it be the Fed, the Bank of England, the ECB, whatever. The central banks are also going to help propel this market higher despite all of this bad news. And that's what we have going in our favor. Now, a lot of people are expecting that the Fed might be cutting rates in March. Now, they may not be cutting as early as we think, and maybe that's what's going to be kind of lingering in the back of my head when I start thinking about that I'm going to put money in treasuries and kind of wait till right around March to see if I'm going to put some more money to work. And maybe that's there. But honestly, ultimately, I do believe that we're in the middle of another bull market, and the market is headed higher. And that does seem to be the case for a lot of market pundits. They believe the same thing. And in this case, I'm really not willing to totally go against the grain at this time. I'm with consensus on this one. Now, this doesn't mean that we're get some sort of broadening of the market that many thought that we'd get, when all of these pundits would come out on TV and they were advising everybody to go out and buy utilities. Make sure you buy the XLU. That's the one that's going to surge. Gone are those days. I'm old enough to remember that. What was that, 2 weeks ago? But earlier last week, half of the S&P 500 companies were more than 10% off of their all-time highs. And this was at a time when the S&P was at or near an all-time high itself. So it's the strength of these companies is providing strength to the index, and that's why it's being held together by a basket of these really high-performing stocks. So let's have a look at what's going on here, and I'll show you some of my market moves, and these are the reason why I bought the stocks that I went ahead and bought this past week. All right, so I'm editing this video as I go along, and I'm noticing that it's actually kind of running a little bit long. Maybe I need to drop a script or something to keep me on time. I don't know, this tends to happen to me all the time, actually. But speaking of time, I value yours, so I'm going to rip through these things pretty quickly, and I'll get through the rest of this video as fast as I can. So the Magnificent Seven stocks are continuing to prop up S&P 500 earnings, and this article was put on January 17th. And Savita Subramanian, she's the chief investing officer over there at Bank of America, noted that Nvidia, Amazon, Meta, Alphabet, Microsoft, and Apple will be the biggest drivers of earnings per share growth in the fourth quarter, up 56% year over year. Without those six stocks, the rest of the S&P is expected to see earnings fall 6%. And really, this chart is all you need to see. So we're currently right here in Q4, and you can see the Mag 7 is up about 46%, while the rest of the S&P is down about 11%. Last quarter, the Mag 7 was up about 50%, while the rest was down about 5%, and before that it was 30%, while the rest was down about 13 or 14. And you can see that this trend is going to continue. It looks like they're projected to continue at least through Q2. The rest of the S&P 500 looks like they will finally go profitable for the first time in a year next quarter. That's what the projection is. Now, it could be that a lot of the outperformance of the Mag 7 has to do with the market analysts like projecting forward this dramatic outperformance. And maybe that's the case, but nevertheless, these are the stocks that I'm the most interested in at the moment, and maybe the reason why a lot of the market analysts think that it's going to be a rotation into small caps or into or even large caps, but they're just not the Mag 7, has to do with this, what looks like is projected to be outperformance of the Mag 7 by the rest of the 493 here in Q4 of this year. But what I think is really interesting about this, well, the whole thing is interesting, but the most interesting thing is it's not really the Mag 7 that's driving this market higher. It's actually, what is this, the Mag 5? 1, 2, 3, 4, 5. Because Apple and Tesla aren't even contributing to the outperformance of the Mag 7, at least not to this start of this year anyway. So what did I end up buying? Well, along these lines here, I ended up buying Amazon. And the reason why I bought Amazon is I see a lot of the same attributes in Amazon that I saw in Nvidia. I think it's underpriced. I think analysts are behind the curve on this one. I think they're going to come out on the earnings day and they're going to announce a whole lot of things that we already know. We already know about Anthropic and their AI. We already know how their digital advertising is kind of taken over, and now they're basically on par with, say, Google and Facebook. We already know they're expanding the Amazon Web Services over to Japan. These are things that we know. We know that they're right-sizing the company. We know that they're trying to increase their profit margin. All things we know. Analysts haven't yet clued into this one yet. That's why I'm so bullish on Amazon. And what I think is going to happen to these guys is going to be similar to what happened in Nvidia, where I think we're going to get like re-rating and like some upward revisions to this stock price, where maybe they had it at 175, maybe now they bump it up to 190 or even like 210, and a whole bunch of people might be piling on to this stock, similar to what they did to Amazon or to Nvidia, which is the reason why I'm not selling covered calls on this one. Now, the other one that I bought was this one right here. I bought the MAGs. And so this is an ETF of what you would expect is of the Magnificent Seven. It sells for $34.27 a share. But all is not what it seems with this one. This is a kind of clever little stock, or excuse me, ETF. Let me show you what it does. So the MAGs is not exactly as it appears. It does involve the Mag 7. It does sell for $34.95 a share. Of course, I bought it right here, and it goes a zing straight up again. Such is the pattern of my life these days in the stock market. But when you look at the holdings of the MAGs, you can see that it's 40% Treasury bills. It's a whole lot of these what are called swaps, which I don't quite understand how these things work, if I'm honest. It has something to do with interest rates, and I don't know, but it's a lot of Treasury bills, and then of course it's the holdings, with the biggest holding being Nvidia. So you do have the Mag 7 as constituents of this ETF, obviously, but what you also have is a lot of these swaps, and I don't know what they're doing, but whatever this thing is doing with the treasuries, the swaps, and the underlying equities here of the Mag 7, it does seem to be working. Let's go ahead and see how this one's performing against the S&P 500, say, over the past year. All right, I think we can all agree that the S&P's had a pretty good year, but let's just see how the MAGs does against This one here, and it's the Round Hill Mag 7. That's the one here in the gold color. Over the past, say, year to date, Mags is up 6%, while S&P is up 2%. Over the past year, Mags is up 41%, while the S&P actually doubled the performance of the S&P 500. As a matter of fact, I think the Nasdaq has probably outperformed. It's probably outperformed Mags, yeah, but only barely though. That's hard to believe because this thing's been ripping. But Mags does seem like a pretty conservative bet on the mega caps in that it seems to be actively managed through not just the underlying equities, but also with swaps and with treasuries. And it's actually pretty similar to the portfolio that I run, minus the swaps, because I don't understand what those are. Now, switching gears just a little bit, it might not be that the market is being squeezed up as I believe it is. Maybe it's just that finally good news is good news. You see, we got some encouraging retail sales data here from December that topped expectations. We got the weekly jobless claims post the lowest reading since September of 2022. We've got the Michigan sentiment survey that came out, shows that the economic vibes are finally improving as consumer sentiment surges. So there's a lot of positive catalysts for this economy. And it could be that if we don't get a rate cut in March, it might not be as big a deal as I think it is. I'm still preparing for a little bit of a pullback going into March, but maybe it's not a big deal at all. Here's when Chair Powell, he went ahead and did this Fed pivot. You can see this is on December 13th. If we look at the Treasury yield, since December 13th, you can see that on December 13th, the Treasury yield was sitting at 4.2%. Now it's currently sitting at 4.13%. So we almost made like a full circle we've almost done our own pivot on the Fed pivot, and we've gone right back to where we were right when he announced the pivot. And so what this says is that the market is not pricing in as many rate cuts as was projected on that day. On that day, they said we're going to have 6, and now we're kind of coming up to the Fed where it looks like we're projecting still about 5 at this point. But nevertheless, it's basically back to where it was in December. So maybe not getting that rate cut in March isn't going to have the impact on the stock market that I believe it's going to have. All right, so that about does it. To recap a bit, I do believe we're headed for a little bit of a market consolidation, if not a little bit even of a pullback. Not a crash, maybe not even a correction, just a little bit of a pullback. But we certainly might not be. I mean, after all, we're headed right into the heart of mega cap earnings season. And those positive earnings could definitely pile on the other positive economic news and send this market higher, especially in the case of Amazon, just like it did last quarter. That was actually what sent the market higher last quarter, was Amazon's earnings. And that could certainly happen again. But either way, I do have a large bit of equity exposure, and I do have cash ready to go just in case there is a pullback. And that's about all. I did it. I think I got that under 30 minutes. Yahoo. All right. Thanks a lot, everyone, for checking out the channel. If you got anything out of this video, yeah, please like, subscribe, hit that notification bell. Until then, have a great weekend, everybody. Bye. All right, so like I was saying at the beginning of this video, last week I ended up drinking this whole entire bottle of champagne, and I just couldn't pour it out because this thing cost 240 bucks. And though I didn't really care that much for the way it tasted and nobody else would drink it with me, which is kind of funny, you pour it into a glass and you just never think you're going to get to the bottom of this bottle, but I sure did. And when I did, I went on Amazon and started buying some stuff. I kind of remember that. Now we're going to go and see exactly what did I buy on Amazon. As a matter of fact, one more reason to be bullish on Amazon: booze. Let's see if the analysts clue in on that one. Doubt they will. All right, well, let's go ahead and see what I actually bought on Amazon last week when I was hammered. So last Sunday was January 14th at doesn't look like I bought any regular stuff on the 14th, at least not on Amazon.com, maybe Amazon.co.uk. So maybe digital orders. And it did. It looks like I bought some music on the 14th. I knew I bought something. All right, so I got The Builders and the Butchers, Hell and High Water. Looks like picked up Lamb of God, Omens. Good, good. I'm rocking out. Godsmack. I didn't even know they had a new album. I do vaguely remember that. Yes, thank you myself. Electric Six, Turquoise. Excellent. January 14th, I also picked up Avenged Sevenfold, Life is But a Dream. Didn't know they had a new album out. Yeah, and let's see. That looks about it. So it appears that I'm going to be rocking out tonight. So, guys, have you ever drank too much and then went on Amazon and bought stuff and then forgot what you got? And then when it arrives at your door, you're like, wow, Merry Christmas to me. Man, I have, and I do it with my sponsor this week, which is beer. I think I'm gonna buy a new air fryer. All right, the beer this week is Green King IPA. This is the most beery beer that I'm aware of, and I had to do like a full repentance from this champagne stuff that I don't ever drink. But honestly, I have to give this beer, brewed right here in Barry St. Edmunds, 5 Jumana Versacci's out of 5. Have a great day, y'all. Bye.